During the pandemic, I invested in crypto. I invested in the stock market. I tried to day trade and stuff. Now it's just one day after our team stand up in the morning, got everyone in our team to download a painting app, made them blindfold themselves. And
What would you say are the 2-3 most critical things that a VC looks out for in a pitch deck?
And we ended up making 60K in 2 days.
Hi everyone, thank you so much for joining us again here today for Cashvisory's new episode. I'm Utkarsh, the co-founder, and we are trying to solve personal finance for young Indians. We want to make sure that every fresh grad can get to their first investment in the most efficient way possible. We have a very special guest here today. We have Noah, and Noah's the co-founder and product head at Fijit. He's a man of many talents. He's done stand-up comedy. He's an ex-VC. He raised funds for his startup while he was still in college. That's pretty epic and amazing, Noah. Welcome.
Thanks, Utkarsh. Thank you so much for having me.
Awesome. So look forward to chatting about a lot of amazing things with you today. Let's start right from the beginning.
Okay.
So I understand that you started doing chemical engineering.
Right.
And then somehow got into the VC world.
Right.
And then became a startup founder. So tell me how that entire journey panned out.
Sure. Okay. Why don't I tell you about both myself and my co-founders? I feel like that's important to this story.
Of course.
I'll start with me. So I'm Noah from Goa, born and raised. My parents are both small business owners. Grew up going to government schools, played a lot of sports. I used to play national level basketball.
Oh, amazing.
Also
Man of many talents, the theme there.
Yeah, I play 3 instruments, guitar, piano and drums.
Oh, wow.
As a kid, ran a lot of hustles. I've sold movies, CDs. I've had like a bunch of food cart businesses.
Interesting.
Met my tech co-founder Lakshman when we were doing our 11th and 12th JE prep together. We used to sit together in class. We started our first business together then. It was a food cart that we kept at the side of the road during our summer vacations.
Wow.
We sold some food, made some money, got chased by gundas for encroaching on their territory. Yeah, there's a whole story there. Eventually, he went to IIT Bombay, I went to BITS Goa. At BITS Goa, I started doing stand-up comedy. So I've done probably like 100 plus shows.
Oh, wow.
Opened for some of the big Indian artists. Spent a lot of time like just, on stage figuring out how to write content, analyze feedback, learn how to like bomb,
Right.
I also started a podcast then called Don't Follow the Leader, where I
Interesting.
interviewed founders, VCs, entertainers. Spoke to Sanjay Nath from Bloom, Fanendra Sama from Red Pass, animation director of Rick and Morty, bunch
Wow.
of comedians. Was making a lot of content around that time. And through the content, I got connected to this guy, Kushal Bhagia, who now runs a fund called All In Capital. They are one of our investors.
Nice.
Back then, he ran a fund called First Check. So he brought me on board at First Check to make content for them.
Right.
We made the series together called Know Your Term Sheet, where we explain basic term sheet terms for first-time founders.
Nice.
Eventually got to do more serious VC work there. I spent a good 18 months there, learned a lot, got to be on a lot of pitch calls, got to write investment theses, actually interact with founders, understand what their problems are.
Right.
And it was a super inspiring time as well. After 18 months, I was ready to move on to my next thing. And I knew I wanted to be a part of building something. I wasn't sure whether it would be my own thing or working on someone else's project. But
Right.
around then, early 22, is when my co-founders and I started working on what eventually became Fijit. I also spent 6 months at Pillow Fund, which was a DeFi startup. Worked
Right.
very closely with the founders there in a product role. And most of my formal product building education comes from that time.
Right.
My tech co-founder Lakshman, he went to IIT Bombay. We are both chemical engineers by degree. First year of college, he was still like figuring things out. He was in the fashion club, etc. Second year, we all get sent home because of COVID. And Lakshman decides that he wants to be the best coder in his college. So he physically locks himself up in his room and just codes. Sleeps
Oh, wow.
in his chair, eats in his chair, wakes up, just codes. So like he doesn't leave his room for 400 plus days. By the time he comes out, he has lost perception of depth temporarily. Legit, yeah.
Are you serious?
Yeah, it took
Wow.
him some time to like return to society. But he had also become the best coder in his college. Even though he was a chemical engineer by degree, he had basically the best PPO, had done the best internship, hacked a bunch of government websites, built a bot to beat the CAPTCHA verification system,
Oh, wow.
rebuilt IIT Bombay's entire course selection program. So he had become like a really strong coder by then. My third co-founder, Karthik, he's a lifelong gamer. He has played every single title you've heard of.
Right.
He knows his history. He always wanted to get into game dev. Ended up studying electronics engineering. During the pandemic, he broke his foot. He was stuck in front of his computer.
Right.
Started off trying to build an engine, like a thing that makes games from scratch. Eventually picked Unity, which is one gaming engine, and over the last year, he's gotten really good at building high quality games very quickly. So yeah, I feel like I've taken a very long way to answer this, so I'll quickly wrap up the rest of it. Early 22, my co-founders and I start working on building projects together. We try a bunch of things that don't work. Eventually, we launched this game called Flappy Musk when Elon Musk bought Twitter.
Right.
It was Elon Musk's face on the Twitter logo jumping through stock market candlesticks. And it was a website. It went kind of viral on Twitter, got hundreds of thousands of plays.
Right.
Subsequently, when Andrew Tate got cancelled, we launched another game called Whack a Tate.
Right.
Then when the crypto exchange FTX crashed, we launched another one. These were like
Right.
crypto casual games.
Yeah.
Raised funding, got some investor interest, raised a pre-seed round while we were still in college. Started to put a team together to build an arcade of trend-based games through which you could earn crypto. Had a lot of learnings on the way, ended up moving out of crypto at some point.
Right.
And where we're at right now, what we're trying to build is the ultimate casual gaming arcade. What we realized after a lot of building was that, with decreasing attention spans today and more people living busy lives, there's a growing demand for entertainment in your tiny breaks, whether you're stuck in traffic, sitting on the pod, in between meetings.
Right.
People are looking for quick dopamine hits. And perhaps there's more forms of entertainment for those quick breaks other than just doom scrolling through socials.
Yeah.
And what we're trying to build is the ultimate casual gaming app, the one gaming app that everyone has on their phone and that caters to all sorts of interests. TikTok for games is how I pitch it.
Nice.
And,
Very interesting.
Yeah, if you look at the app, it has a bunch of games on it. A lot of them are trend-based. A lot of them are, this unique IP that we're experimenting with now. We've got pretty cool social features on there. You can play against friends. You can take part in groups. You can play live multiplayer games,
Right.
chat, etc. There's also an exciting progression journey that we've built because each of these games individually has a short lifespan. We need users to be committed to the platform and not
Right.
necessarily any
A particular
individual
game.
piece of content. So yeah.
That's super interesting. And
Thanks.
Noah, there's first of all, phenomenal journey, right?
Thank you.
And there's so much to unpack there,
Sure.
right? So we're
Yeah.
going to be going step by step.
Perfect.
So let's talk about all the sort of entrepreneurial things that you did even before college.
Sure.
That was pretty amazing to me. Tell me
Okay.
more about the food cart. Tell me more about sort of what got you interested and what was the motivation behind you trying out all those ventures.
I come from a family of entrepreneurs.
Right.
My grandmother runs a business in Goa that she runs a children's clothing / wedding business.
Interesting.
She has and she built that from the ground up. Her husband started the business. He ended up he passed away soon after, and she scaled that business from one little shop to 3 shops, 40 plus people working for her. All of this inventory, etc., etc.
So it's in the blood, basically.
I guess so. My dad also runs a distribution business in North Goa. So I think I've always had a lot of what do you call them? Role models, entrepreneurial role models in my life.
Right.
I first got into. I first started finding tech super interesting in the 8th or 9th grade when I read the Steve Jobs biography
Right.
by
Right.
Ren Schneider. And I don't know, something about the whole process of building tech, how iterative it is, how wide of an impact it can have, really excited me.
Right.
I had no idea how to get into tech. I tried to teach myself how to code a lot. I never ended up sticking to it. So getting into that venture capital gig was super cool for me because
Right.
it showed me all of the ways that I could be involved in tech without actually writing code myself. I guess I like building things, and I
Right.
like the whole process of putting something together, selling it, and then seeing how people react to it.
Mhm.
So the food cart, the first time I did this was when I was in the ninth grade. There was a fest happening at my school.
Yeah.
I bought they were selling to restaurants,
Mhm.
and I told some friends that let's get together and we'll buy one of these plots and we'll sell some food. So we bought the plot. The whole staff room found out about it and laughed at us. Or like a couple of teachers came to my class and made some jokes about it.
Right.
But we ended up putting together a pretty solid looking stall. I made sure everyone was wearing gloves. We were selling stuff that nobody else was selling. Hired 10 of my friends to work for me.
Right.
And we ended up making 60K in 2 days.
Oh,
as
amazing.
Like a bunch of 15
That's a
year olds,
fortune
right?
for a school
Yeah,
kid.
that was awesome. Yeah. Experiences like that I had as a kid contributed to the level of optimism that I have about building.
Right, right, and that's amazing. I think the key takeaway from here is that you always saw this growing up.
Right.
You saw your family being entrepreneurial, and my journey was a bit similar as well, because my dad started his own business from scratch.
Right.
And he is traditionally what we call a self-made man.
Right.
Someone that I really look up to. So
Right.
it's great to have those sort of role models growing up.
Mhm.
But to actually put it in practice is a whole different ball game.
Right.
So amazing that you started so young and early, because one thing that you also talked about was how you tried and failed various
Right.
things, right? So that's, I think, again, one common theme in anyone that achieves any kind of success. People end up seeing that success, but they don't see the journey and the failures that you go along the way.
Right.
So tell me about some of those. Like,
Sure.
what were some of the most instrumental moments in your life
Right.
where you think those moments kind of shaped the trajectory of where you are today? In terms
Yeah.
of mistakes, it could be
Right.
setbacks.
That's deep. So I think as a founder, you sort of have to understanding that failure is a part of the process. It's not a judgment of character. It's just when you're trying to do something new and different, the rules are not written, so you have to try a lot of things.
Right.
You have to have a hypothesis. Sometimes your hypotheses are right, sometimes they're wrong. So failure is just a part of doing it. I think there's a lot of parallels there with stand-up comedy as well, because you like things like music you can do in a vacuum.
Yeah.
You can perform music and record it yourself, and it can be good. But something like stand-up requires an audience to validate it.
Yeah.
Just
In real time.
In real time.
That's
In real time. The same way building a product requires an audience to validate it
Yeah.
in real time. And when you're doing stand-up, you have to come up with new ideas. And like when I wrote jokes, the way I did it is I had rough ideas that I'd write down every time I thought there was potential somewhere. I'd take it on stage, sort of work it out over time. And it would take some time to get good. But once
Right.
it worked, it sort of worked. And the process of building a feature or building a game is pretty similar.
Right.
You have some hypothesis about, okay, I think this is going to work. You put it out there. You see some parts of it are working, some parts of it are not. You modify it over time. Yeah, and some things just don't work. And the same way, like go on stage, you put a lot of effort into something, you put it out there, and you just bomb, right? And that's okay. That just happens. So I guess my time doing stand-up might have contributed to developing that thick skin that
Right.
you need to be able to do this.
Mhm.
So I that was like constant dealing with failure constantly. So yeah, I feel like that should answer
That's
question.
pretty amazing, and I wish I had an example as cool as stand up to talk about my journey.
Right.
But for me, where this same sort of transition happened was when I did sales.
Okay.
For the first time.
Right.
So when you do sales, you need an exceptionally thick skin.
100%.
Right? And there are failures after failures, but you can't let that sort of dictate what you do in the future.
100%. Exactly.
You
When
learn
you
in it,
when
right?
you're fundraising as well, right?
Absolutely.
It takes typically for most people you're getting a lot of no's before you get your first yes.
Exactly.
And
Yeah.
to be able to put a smile on your face, go back out there, present to the next person with the same amount of energy, knowing that this person could be the person.
Yeah.
It does take a certain thick skin.
Absolutely, absolutely. But do you think, like, talking about your fundraise journey,
Right.
do you think the VC experience that you had prior to that helped you with your fundraise process?
For sure, in a lot of ways. Firstly, because of my time in the VC world, I was connected with a lot of founders who I
Right.
got to spend time with, talk to, in some cases, develop a personal relationship with. And that definitely helped open a lot of doors for me. Whenever you're reaching out to any VC, cold reach outs are great, but it's always better when you get a warm intro.
Absolutely.
And there's no better intro than one from a portfolio founder.
Yeah.
So that helped a lot. Besides just seeing the Y Combinator and Gary Tan do it, where they rip apart pitch decks.
Yeah.
And I got to see that happen on a daily basis when I worked at this VC fund, right?
Right.
Like, when we listened to pitches and discussed them later, I could understand. I got to learn what VCs look for and like how to potentially present better. So yeah, in that way, I do think it definitely my time in VC contributed to.
Awesome. So just also building up a bit more on this. So what would you say are the 2-3 most critical things that a VC looks out for in a pitch deck?
I can tell you what I think an early stage VC looks for. This is just at your pre-seed stage.
Yeah.
One thing that's very important is co-founder relationship. 60+% of startups, 66% I think of startups fail because of founder conflict.
Yeah.
And when a company is at a very early stage and there might not be any users, it might be a paper idea or some MVP.
Yeah.
There's typically not a lot of data that these people have to work with.
Yeah.
So knowing that these two people can still work things out and build together, even if these people know how to deal with conflict, is important.
Absolutely.
When I used to do my podcast, I spoke to this one guy, Shashank Murali, and he told me this very cool thing. He said that he has something called the beer test, and
Right.
if co-founders can have a full-on battle but still have a beer together at the end of the day,
Right.
they're probably a good fit for each other.
That's a great one.
And I love that I have that kind of relationship with my co-founders.
Awesome.
I think there's fights in any relationships, there's conflict in any relationship, but being able to deal with that well is important. Luckily,
Totally
since
agree.
we've been friends for so long before building Fijit, we have that relationship with each
Right.
other. So yeah, I think co-founder relationship is something that people look for. The second is market size. If you're at a very early stage, if you're building for a big market, it makes more sense for
Yeah.
VCs to enter. And the third thing is, in my opinion, is founder market fit.
Yeah.
Like, are you the right person to be building this?
Makes sense.
Yeah.
Yeah, those are amazing points. And you know, to build upon your first point, I think this one very common example that you see sports people use, right?
Right.
Whatever conflicts happen, leave them in the field.
Right.
So you need to look at your sort of co-founder relationship, your work relationship the same way. Whatever conflicts are work-related can't transfer to your personal life.
Sure.
Right?
Yeah.
Those are work disagreements. So that's amazing that you talked about that. Now, talking so much about the VC ecosystem, the fundraise, and the fact that you did it in college is pretty amazing.
Thanks.
But let's bring finance into the conversation here.
Sure.
Right. So, how did you sort of manage your personal finances, let's say even before college, during college, and post your startup journey? The reason why I'm asking this question is, was finance also a motivation for you to
Right.
do a lot of the ventures that you did?
Got it. Okay. I'll answer the last part first. For me, until now, the money, like the personal money, has not been a factor at all.
Right.
I think, I'm young. At this point, I just want to build things. I want to play bigger games.
Right.
And that's what's important to me. Like, making money is, for myself, is not really important to me right now.
Right.
Getting to play a bigger game, making money so that I can, keep building things, keep building bigger, cooler things. That's much more important to me right now. But yeah, of course, given personal finance is important. I think my generation, specifically a couple of years older and younger than me, had a unique opportunity of getting an education in finance during the pandemic. Because all of us were at home,
Yep.
a lot of people started investing
Investing.
then. That's when I started investing as well.
Amazing.
And so that's when I got introduced to the stock market. That's when I got introduced to crypto. That's when I got introduced to the world of VC as well. That's
Yep.
when I started doing my VC internship. So for me, my personal finance education began really then. Of course, when you go to college, you have allowance for the first time. I mean,
Yeah.
first year of college, I wasn't making any money myself. So figuring out how to manage that money, not having to ask my parents for money too often, I
Right.
guess that's where it really began. But Money plays a huge role in me being able to do my job.
Yeah.
We are a venture funded business. For me personally, my co-founders and I don't take very big salaries, but making sure we manage our money well enough is important so that we make ends meet and we
Got
can
it.
focus on building this thing.
No, that's amazing. And what the key point that you highlighted was you're in here for the long haul,
Right.
right? You're not looking
Yeah.
at short-term returns.
Exactly. Because of that, I don't end up really doing a lot of super interesting things with my personal finance. I just during the pandemic, I invested in crypto. I invested in the stock market. I tried to day trade and stuff. But now it's just SIPs.
Yep.
I want to focus on my thing. Let this money just, the amount of money I can put aside every month, let it just do its thing.
Right.
So yeah, that's where I'm at.
No, and that's amazing because I think a lot of people, once they start investing, the moment they start investing, they get caught up in the cycle of I need to day trade, I need to
Right.
actively manage my
Exactly.
stocks, I need to invest in whatever is the latest asset right
Yeah,
there.
everyone
being
thinks
crypto.
they're Warren Buffett.
Everyone
Yeah.
thinks they can beat the market, but the
Yeah.
reality is that 90% can't.
Right.
Even if they try hard, and even the 10% are probably professional money managers.
Right.
And not all of them are able to beat
Exactly,
the market.
yeah.
So that's a very important takeaway, I think, for anyone that's starting to invest. That at the end, it comes down to the discipline and habit
Right.
of continuing that SIP,
Right.
as opposed to trying to outperform the market and
100%.
reinvent the wheel.
Yeah.
Right. So that's great. Tell me more about when you started off.
Right.
Because as you rightly said, for Gen Z, for young people, crypto was the in thing around the pandemic time. Just after that.
Yeah.
So how was your exposure to it,
Got it.
and DeFi in general?
Right. So my exposure to crypto happened first from a philosophical and tech side as opposed to from a investing side.
Right.
In my first year of college, there was this senior of mine, Atharva, who was taking a course on. It was an introductory course into crypto.
Right.
And so my introduction to crypto was trying to write a smart contract and not buying Bitcoin.
Right.
But that's when I first heard about it, and it just seemed like potentially the internet was being rewritten,
Right.
and we got to be really early to the party. There was something very exciting about that. I used to listen to a lot of Balaji podcasts.
Right.
I eventually started off buying like 10,000 rupees of I think Ethereum and Bitcoin
Right.
during the 21 bull run, and within a week it was 15,000.
Right.
And at that point I was telling all my friends about it. I decided to double down. I put in all the money that I had made at that point. I put in I think 50K, and in a couple of weeks it was 1 lakh.
Right.
And a couple of weeks after that it was 40K or something
Right.
like that. So I guess that in itself was an education for me and a lot of people like me.
Right.
Don't to make sure you know what you're doing here and understand that you should be putting money here that you can afford to
Afford
risk,
to lose, yeah.
afford to
Absolutely.
lose. So that was my introduction to the crypto market.
Mm-hmm.
I really like the tech. I think it's very, very cool. I
Absolutely.
think it can change the world.
Mhm.
Right now, there's a lot of really interesting and cool things happening in smaller communities. The tech might not have reached its mass user form
Yeah.
yet. But yeah, I am still optimistic about crypto tech.
Right.
And
Absolutely.
from an investing point of view, I'm still hodling. I treat this as my investment into the future of the internet.
Right.
I don't trade anymore, but I'm still holding what I have.
Right. No, and that was again an amazing sort of Elon Musk reference to the moon.
Right.
But my approach as a financial advisor is something
Right.
similar to what you do,
Right.
which is put a very small percentage of money there which you're okay to lose.
Right.
But you're also sort of hedging, right?
Right.
Like in case this becomes something big, you have some exposure to
Right.
it. But always remember that you're okay to lose that
Yeah.
pool of money.
Yeah.
So that's a great point.
Don't you think that's a good way to think about all the money you invest?
Yeah,
most of the
absolutely,
business?
absolutely. So, I mean, I would just say that the nuance there is
Yeah.
that not all assets are same in terms of risk.
Right, of
Some
course.
come with higher risk.
Of course,
So, if I were to put it on a spectrum of a risk scale,
Right.
like obviously it would be FDs followed by bonds, then it would be probably gold, then stocks, and then crypto.
Right.
So, as long as you're sort of cognizant of the risk that you're taking and you're okay taking that, that's all that matters.
Right.
right? So, but great to hear your thoughts on it, and the fact that you think about it more pragmatically with the experience that you've had
Right.
is amazing.
Thanks.
Tell me also about the stock experience and the day trading piece.
Sure. So that started off with me watching this show called Billions.
Mhm.
Have you heard of it?
Yep, I've
Okay,
watched it as well.
so I do this thing with shows that I like where every time a new season comes out, I start from scratch again.
Right.
So season 1, season 1, season 2, season 1, season 2, season
Oh,
3.
wow.
So I
Amazing.
watched this show probably like 8 or 9 times now. But Billions was super cool, and it inspired me to want to start trading.
Right.
This was, I guess, second year of college. We had just got sent home. I borrowed some money from my parents. I made some good investments. I made some bad ones.
Right.
Eventually had the realization that I cannot beat the market.
Right.
And at that point, I also started to get busy with other things.
Mhm.
I the way I think about investing now is that I do want to make sure I'm putting money aside for my future, for you know, a potential rainy day, or just being able to live a better life.
Yeah.
But right now I don't have the bandwidth to play the game and try to beat the
Beat the
market,
market.
all of that.
Correct.
And so I just make sure I'm doing what I consider to be the responsible thing, putting aside a little bit every month. But
Yeah.
I don't actively trade anything anymore.
Mm-hmm.
Yeah.
No, and I think there's a reference from the show Billions,
Right.
where one concept that you learn is the house always wins.
Right.
And what that essentially means is if you have specialized knowledge,
Right.
if you do this full time,
Yeah.
or if you're in the inner circle of the top ranks,
Right.
you're much more likely to do better than an
100%.
average retail investor.
Yeah.
Right. And another very important point that you made was that you don't have the bandwidth to actively work on it.
Right.
Which is crucial because
Yeah.
most people who have an active career,
Yeah.
who are focusing on growing at work, do not have the time to
Right.
put into this.
You need to make sure you're doing your research while you understand what you're
Absolutely.
doing. Like investing is deciding what, at a very basic level, is deciding what ideas deserve capital.
Right. Agreed. Totally agree.
And so when you're investing, it should come from that perspective, at least to some extent.
Yep,
Yeah.
that makes total sense, and it also ties to the whole VC experience, right? I
Right.
mean, sort of looking at an idea doesn't matter if it's a startup or a stock,
Yeah.
or a coin, right?
Yeah.
That's how you make that decision. And one more very very crucial part, which we talked about, was the fact that if you sort of actively try to manage your portfolio with a full time job, you'll definitely not get enough time
Yeah.
to do it. So passive management strategies is what works best.
Right.
So SIP is one good one that you talked about, but are there other sort of passive things that you do with your money management?
I try to sometimes, not sometimes, I try to put aside a little bit of money every month just as a joy budget as well.
Right.
Even if it's just like 5,000 rupees or whatever,
Mhm.
put it aside to maybe try something new, get into something nice, go on a holiday or
Right.
whatever. That's something I do. I've tried investing in other alternate assets as well. So I own a little bit of nothing stock
Right.
that I got by. There was this crowdsourcing thing they did once. So I'm a shareholder of nothing. They send me
Right.
merch every now and then.
Interesting.
But that's not something I actively do.
Mhm.
But no, honestly, no. Other than the SIPs every month and putting a little money aside, there's not much else I do.
Right.
I try to make sure I make sure I always pay my credit card on time. I make sure I always clear my Splitwise on time. So yeah, that's how.
Awesome. And I think most people try to overcomplicate it, but they
Right.
don't need to.
Yeah.
It's very
I'm
straightforward.
not doing any. I'm not trying to be Warren Buffett right
Right.
now. I'm trying to build something, and like I know that's what my focus is.
Right, right. No, that's amazing. That's
Yeah.
amazing. So let's go back to your experience with your company building,
Sure.
right? And your startup journey. So when you sort of raise funds, you were still in college, right? And obviously we see a lot of startups also failing and struggling because they haven't managed the money that they've raised
Right.
efficiently.
Right.
So from a company finances standpoint,
Right.
how did you get started managing
Yeah.
it? Did you have help?
Right. So for us also, looking at all of those startup stories of people raising a lot of money and then blowing it, that we were very from day one itself. We
Right.
wanted to make sure we were super careful. So we've always been very chindi. We don't spend on unnecessary things. We haven't from day one. From the start itself, I wanted to make sure that I understood how to do accounts properly. That we were doing our filings properly. All of that. I also didn't. I also know that our job as co-founder and as the team is to build the product and put it to market. It isn't necessarily to understand how to do accounts and legal work.
Yeah.
So for all of the responsibilities where the wheel doesn't have to be reinvented and we can afford to hire help,
Yeah.
we've done that. We made sure we got a really great lawyer from day one itself and a really great CA.
Yeah.
Shout out to Nimisha and George. And so yeah, I spent time with our CA understanding how to do accounts. Made sure we account for every single transaction.
Right.
We are making it clear to our investors how much money we save,
Mhm.
how much money we spend every month.
Right.
Besides that, for the first time in our lives, we had to do budgeting. We had to decide how much we want to spend on various things, how we would change the way we spend money over time, and as we were working on different phases of the product. I guess to answer your question, how we figured that out is trying to make sure we were being very responsible from day one itself. Understanding the importance of these things, and because of that, making sure we surrounded ourselves with a team that could help us make sure we were
Right.
not messing anything up. And also, talking to people, learning, making sure we were being super careful all the time.
Correct. And that makes complete sense. And
Yeah.
the important point that you mentioned there is you don't need to do everything yourself.
Right.
You can hire the right experts to
Yeah.
sort of help you out in the right
Yeah,
places.
at our stage, you're not hiring someone to do your budgeting for you.
Yeah.
But you're hiring someone to make sure you do your filing properly, etc.
Exactly.
etc.
The
Budgeting and stuff.
compliances.
Yeah, that stuff was for us to figure out. That stuff was from a first principles point of view, talking to founders, talking to our investors.
Yeah.
Yeah, that's a large part of this job is just figuring things out, right?
Yes, absolutely,
Being
absolutely.
comfortable with uncertainty.
Uncertainty.
And even if you don't understand how to do something, understanding how to figure it out, or
Yeah.
at least where to start, I think. is
Exactly.
figure it
That's a very, very good point. And
Yeah.
I want to sort of go deeper into
Sure.
how you figure things out
Sure.
as part of your product as well.
Okay.
Right. So because as you said, you talked about a couple of these points in your introduction,
Right.
where you mentioned that people's attention spans are dropping.
Right.
And the dynamics of how people consume content,
Right.
games, or anything online is massively changing.
Right.
Right. So how did you sort of get started with identifying those trends?
Right.
And how do you keep yourself abreast to
Right.
make sure that you're keeping up with the rapid rate of change that's happening?
Right. Like building a tech product in general, I guess, is a very iterative process.
Yeah.
We, again, like stand up, started off with a hypothesis, pushed something out, modified it over time. When we started off, we were building web based games. We had never built an app before. After we raised funding, our goal was to build an aggregator of trend based crypto games
Right.
with which would play to on. We started putting a team together, building our app. It decided to move away from crypto at one point because we felt we were doing too many things at once. We were a small team with limited resources, limited experience, still in college, trying to build Web3 infra as well as a social gaming arcade.
Right.
Made sense to pick one thing, really do that well. So we trashed everything we had built in March 23, gave ourselves a 2-week deadline to launch a whole new app from scratch. Put an app together just in time to launch it at BitsGo's Tech Fest. Quark.
Right.
Didn't even manage to get it on the Play Store or App Store in time. So we ended up making 350 people download an APK.
Right.
Those were our first few users. Repeated
Got
this
it.
experiment at a couple of colleges. Eventually launched the first version of the Fijit app in June 23. It was like this grid style arcade black color app with a bunch of cards on it.
Right.
It kind of did look like it was made by a bunch of college kids. We did get a bunch of users on it, but a lot of things weren't working. The app wasn't sticky enough at the time.
Right.
We realized that we weren't making content fast enough. There wasn't enough content on the platform. There were no social features. There was no progression. We figured all of this stuff out by talking to users, by doing a bunch of research, by iterating the app in small ways, seeing how
Right.
people responded to it. Reached this point at some point in 23 where we knew we had to redesign the whole app. Because what had happened is, for a large majority of people, the app wasn't very sticky, but for a small pocket of 20-30 users, the app was working out really well. They were
Right.
spending 5-6 hours on it every single week.
Mhm.
And it was honestly surprising who these people were. Like, one of them was a Series A funded fintech founder
Oh,
who
interesting.
was actively looking to stop doom scrolling when he found a LinkedIn article about us.
Right.
And then he downloaded our app, and now he used it in between meetings, during his commutes, and he felt like it put him in a much better mental space.
Right.
And it was still that dopamine hit that he was looking for, right?
Mhm.
So we definitely knew there was something there. We just had to figure out how to put it together well.
Got it.
And we ended up doing this creative exercise, I'd say, or something like a creative exercise one day, to figure out how to structure our new app based on our learnings, based on the mistakes that we had made.
Right.
One day after our team stand up in the morning, I got everyone in our team to download a painting app on their
Mhm.
phone, made them blindfold themselves. And I started to describe hypothetical apps to them where monkeys are making cakes. You can buy these cakes also.
Right.
Everyone had to imagine the app for themselves. Selected green color on everyone's phones. They're
Mhm.
all blindfolded. And I told them to discover the content, like how are you using this app.
Right.
And everyone did like a swiping motion, because that's how everyone's discovering content now.
Right.
Then changed everyone's color to red,
Mhm.
and told them to change their username in their profile. Everyone
Mhm.
went to the top right corner.
Right.
And we've been using phones for 15 years, right? So there's like, so when an
Muscle
app is
memory.
exactly when an app is designed well, you know how to use it even though you've never used it
True.
before. There's probably a right place to put most things.
Mhm.
And by doing this exercise, we effectively heat mapped how the people in our office were using their phones, and there was so
Wow.
much commonality that we could actually use that as a framework to design our new app.
Right.
So to answer your question, it ends up with the process of product building is very iterative.
Mhm.
And you can reach out to investors for help, you can reach out to other founders for help,
Mhm.
but very often you're just figuring things out from a first principles point of view.
Right.
I guess with time, hopefully you get better at asking the right questions, which helps you figure
Right.
out the right answers. How we stay on trends is we are very active on socials.
Mhm.
What we've also figured out how to do really well is build high quality games very fast. We can build a game in under a week. 4 days is our record.
Wow.
So that really allows us to jump on a trend while it's still current and build content about it.
Awesome.
But I think our approach has changed slightly since we were just doing trend-based games. The issue with trend-based games is when it works, it's great. But what you're really doing is you're first creating a piece of content and then looking for a channel to distribute it.
Right.
When it works out, it's awesome.
Mhm.
But you're really at the mercy of the internet here,
True.
right? Sometimes things
How
work,
long
sometimes
trends
they
stay?
don't.
Yeah.
Not just how long trends stay, but does the internet decide that this is worthy of picking up and making popular?
Right.
In the case of Flappy Musk, it worked out.
Yeah.
In some other cases, it hasn't. Right?
Mhm.
More often than not, it won't.
Right.
Our new approach is picking distribution channels that already exist and
Mhm.
creating pieces of content for them. That way, your likelihood to acquire a user is much higher.
Right.
So one very cool thing we're doing right now is we're collaborating with influencers, building games about them.
Right.
These are
Very
influencers
interesting.
within the range of a few 100,000 to a few million followers, creating this whole new IP for them, new way for them to engage with their audiences. For us, we get to tap into their cult followings at very low bandwidth costs.
Right.
Like most of these games are commodity mechanics, but when you add this theme and story to it, you give it a whole new life.
Right.
So yeah, it ends up being mutually beneficial, helps us grow.
Right.
Yeah, in a more organic way than something like performance marketing might
Right.
do.
No, and that's super interesting, and
Yeah.
and I'm definitely going to steal your idea of blindfolding the team.
Oh
and then-
sure, go for it.
that's amazing.
Yeah.
Absolutely brilliant. I
We
would
can
say.
call it the fidget philosophy.
The fidget philosophy,
Yeah.
yes, guys, remember this, the
Yeah.
fidget philosophy, and so just building. So you guys are game builders, you're game
Yeah.
developers, but with attention spans dropping, gamification has started to sort of seep into a lot of other aspects of our
Sure,
lives.
yeah.
For example, with us, we are trying to gamify aspects of personal finance.
Okay.
Because when someone is getting started, it's just so overwhelming, right?
Right.
So the idea is to gamify and break it down into small little bite-sized journeys,
Right.
so that you could play a game, interact with the content,
Mhm.
and learn it, and just focus on that one piece of learning.
Okay.
Right. So where do you see this gamification coming into all these different aspects, be it fintech, be it ed tech, be it anything else?
Right. So I've seen a lot of people have started to get very excited about games recently.
Right.
You're seeing all sorts of companies run experiments with games. Even LinkedIn has launched some sort of gaming thing. Um, I definitely do think a part of what contributes to that is our decreasing attention spans.
Yeah.
We need experiences to be more and more engaging now um, to just stay
Stay on.
focused, right?
Yeah.
Yeah. Average attention span now is it's lower than it's ever been before. But I also think there's something really cool about that. The world is evolving, the internet is evolving, and
Yeah.
it's becoming more interactive. It's becoming more immersive, and that's exciting. That's cool. I think if we can effectively teach people how to do things, and gamification is how we end up doing that, there's nothing wrong with that.
Totally agree.
There's great things we can do by making learning more fun.
Right.
Yeah.
Absolutely. And I recently saw games on Netflix as well.
Right. Yeah. Yeah.
Probably they were beta testing. And
Yeah,
maybe I was one of the
yeah.
few users that saw it. But
Netflix has had games for some time. They're not within the app. You have to download them separately.
Right.
But yeah, a lot of people are getting into gaming now, and
Right.
I think that's awesome.
right.
Yeah. Yeah.
No, excellent. And I think the state of the world is at a very interesting place, and the rate of change is getting faster and faster.
Yeah.
Right now, sticking to that theme,
Yeah.
I have this very interesting segment here called Rapid Fire.
Okay.
Okay, so it's going to be rapid questions and
Sure.
rapid answers from you.
Let's go.
Okay, let's go. So the first one is profitability versus growth.
Eventually, definitely profitability at this stage. Definitely.
Bootstrapping or investor funding.
Depends on what you're building. In a case like ours, where we're building a trying to build a large consumer tech business, I think fundraising is the right way to go.
Right. One financial metric that you check daily, if any.
Amount of money left in the bank for sure.
Got it. So the runway,
But yeah,
basically.
but also of course, amount of money we're making.
Right.
Yeah.
Got it. Favorite financial tool or software that you use?
Personally,
Yeah.
I really like the Jupyter app.
Right.
Yeah.
Got it. One mistake to avoid in startup funding.
Make sure that you don't just get investors but partners. Like, you want to make sure you take money from the right people.
Right.
Because your relationship with them doesn't end when the money enters the bank account. You really want to make sure they're the kind of people who are supportive.
Supportive. That's
Yeah.
true. Best financial advice that you've ever received.
Don't try to beat the market, I think.
Right.
Yeah.
Awesome. The most surprising cost of starting a business.
The most surprising cost of starting a business is opportunity cost.
Right.
Especially when you go to a good college, all of your friends are making a lot of money and you're not.
Right.
It can be potentially demotivating.
Right.
But also at the same time, your job is so fun most of the time, or at least like what you get to do is so rewarding that it's really not a
Makes
big
up for
deal.
it. One skill every entrepreneur should have.
The ability to adapt. I
Right.
think. Yeah, deal with be comfortable with being
Uncertainty.
uncomfortable, being comfortable with the unknown. Yeah.
What's your go-to relaxation activity apart from fidget?
Apart from fidget, my co-founders and I recently bought an inflatable swimming pool for our balcony.
Oh, wow.
So,
Amazing.
chilling in the pool on Sundays is a lot of fun.
That sounds fun.
Hanging out with friends also. Yeah.
Nice.
Yeah.
And what's your favorite podcast?
My
Apart from
favorite-
Cashvisories.
Of course, other than Cashvisories. I've been a long time follower of the Joe Rogan podcast. I
Right.
love that show.
Mhm.
I'll give you three here. The
Mhm.
three that four. Joe Rogan, Lex Friedman, Andrew Schultz, the Flagrant podcast,
Mhm.
and Nikhil Kamat's podcast,
Right.
WTF.
Amazing. All amazing ones. I
Yeah.
totally agree. Favorite video game of all time?
My favorite video game of all time is an old classic. It's Pokemon Ruby.
Right.
Yeah.
Amazing. One piece of advice that you'd give to your younger self?
Damn. One piece of advice I'd give to my younger self is to trust the process and not be afraid to committing to things that I don't necessarily know how to do, as
Right.
long as something is exciting and I think has the potential to be cool and good.
Right,
Yeah.
right. Awesome. And there are so many parallels here that I can draw in personal life, in
Right.
business, and in personal finance as well.
Yeah.
Because you sort of trust the process of being
Yeah.
disciplined
Right.
and doing what's time tested,
Right.
and that's what reaps the rewards in the end.
Yeah, for
So
sure.
with that, on that note, we'll wrap up.
Awesome.
Thank you so much again, Noah,
Thanks
for
for
joining
having
me. And guys, hope you enjoyed this conversation. Hope you learned something new. Remember to like, subscribe, and share with someone who might benefit from this. Thank
Download
you
the
so much.
Fidget app.
And the Fidget app for sure. Definitely a fun
Yeah,
one.
yeah.
Thank you guys.
Cheers.
Cheers.
See you guys.